Welcome back to the reports, the 3rd of January 2024. Right, today I want to do a deep dive into United Healthcare. It is one of the stocks available on VT platform for you to trade. And those that are still new here, basically United Healthcare, the full name is United Healthcare Group Incorporated, ticker UNH, business healthcare and industry healthcare plans. Now, just to give you an overview of the company, United Healthcare Group is a diversified healthcare company primarily known for providing health insurance services and healthcare products. It operates through two main business platforms, United Healthcare and Optum. Okay. Now, United Healthcare provides healthcare coverage and benefit services. It offers a variety of healthcare plans and services to individuals, employers, and Medicare and Medicaid beneficiaries. This segment deals with the distribution of products and services to manage health effectively for millions of people in the US. Now, Optum is a health service platform which includes Optum Health, Optum Insight, and Optum RX. Optum Health offers care delivery and management, including care coordination and health management services. Optum Insight provides data analytics, research, consulting, and technology services to healthcare organizations, helping them to improve efficiency and outcomes. Optum RX handles prescription drugs, plans, and medication management. You can see it's a wide and very big and established healthcare company provider in the US. So let's look into the Q4 fiscal 2024 results. From the diagrams itself, we can see everything is growing. United Health Group reported its fiscal Q4 2024 results showing robust performance with a significant revenue increase. You can see here. The company posted a revenue of 100.8 billion, marking a 9.2 rise from the third quarter of 2023 and surpassing analyst expectations by 1.6. Net income also grew by 3.7 year-over-year to 6.06 billion. However, the profit margin slightly decreased to 6% from 6.3% in the same period last year. But the most important thing, if you can see, this is the fiscal quarter 4, but in actual fact, it's quarter 4 only will be the real. I mean, when we're talking about quarter, I'm just talking about that particular quarter, but they are releasing the previous quarter. That means the Q3, right? That's why I'm using that. But whatever it is, you can see on the yearly basis as well, revenue is rising, operating cash flow is rising, free cash flow is also rising, net income is rising as well. Okay, so you can see everything is rising over here, which shows that this company is, pretty solid. Now, for the earnings per share, increased to 6.56, up from 6.31 in the previous year, although it fell short of analyst prediction by 1.8%. Looking forward, United Health forecasts an average annual revenue growth of 7% over the next 3 years, which is slightly above the 6.7% growth forecast for the US healthcare industry. This outlook suggests continued strength and competitive edge in its market operations. Okay, so everything is good here. Now the question, why did the stock decline despite earning growth? Right? So as you all know, I like to look into really, really good companies, and but those companies are affected by bad news, and because of that bad news, the stock tanked. Okay, I'm very interested in those kind of things because it gives me the opportunity. But like we did for Google, right? So is UNH going through the same thing? Is it a company that can possibly recover from this bad news? If it can go up. So let's first look into why the stock declined in the first place. UNH stock fell sharply, but not for the typical reasons like disappointing earnings or legislative changes. Instead, the drop was driven by concerns over the company's handling of customer claims, highlighted by discussions following the murder of its UnitedHealth Group's insurance arm CEO, Brian Thompson. He was basically gunned down. Now, the focus on UnitedHealth's lower than average claim processing rate fueled fears that potential adjustments in coverage decisions, whether due to internal policy shifts or external pressures, might undermine profitability in the industry. The public backlash against these practices and news of bipartisan group of legislators seeking to break up pharmacy benefits managers by forcing them to sell pharmacy businesses contributed to the stock downturn. So does this sound familiar to you? Yes, it is. Google. It's like Google. Okay, they want to break up. It's getting too big. They want to break it up. So basically what's happening is that there is a bipartisan group looking into breaking up pharmacy benefit managers, PBM, basically. And as you know earlier when I mentioned, right, this UNH part of his business are also in the pharmacy business, right? So it's like Google all over again. So this contributed to the drop, okay? But let's look into the overall economic mode of UNH, United Health. Is how big is it? How strong is it? Is this something is going to rocket? If the economic mode is under threat, then that's a different case, okay? But you have seen it's nothing to do with all this. The rest is just speculation. It's just because the CEO, the CEO, not the group CEO, okay, but the insurance arm CEO, he was gunned down basically, and it was later revealed that it wasn't gunned down by a disgruntled what do you call client. In fact, the person who murdered him wasn't even a client at all. So let's look and see, because again, these are just policies. It could be rectified, but most important thing before we look into that, we need to understand, is the UNH economic mode under threat? Now, among the UnitedHealth Group various competitive advantages, its integrated model particularly stands out. Okay, this is the key part of it that makes it, above the rest. This integration of both healthcare and insurance services under one umbrella, especially with Optum's diverse capabilities in health services, pharmacy care, and analytics, allow UnitedHealth to control costs and improve patient outcomes more effectively than competitors who might only offer insurance services. Now, this integration not only enhances efficiency and service quality, but also position the company favorably in terms of negotiating with providers and managing care, allows UnitedHealth to negotiate better rates with healthcare providers and pharmaceutical companies, helping it maintain competitive pricing while preserving margins. Now, margins is very, very important in the healthcare industry. Okay, so it's able to preserve that, then I don't see, threatening UNH. For consumers and employers, switching health insurance providers is often a complex and risky endeavor due to the intricacies of coverage differences, provider network changes, and the potential for gaps in care. United's health comprehensive range of services, including specialized health management and wellness program through Optum, increase customers' dependency and loyalty, raising the switching costs and securing customer retention. So other than that, UNH large network of patients and healthcare providers create a virtuous cycle where more providers are attracted to the network due to the large patient base, which in turn attracts more patients seeking extensive provider options. Now, this network effect strengthens UnitedHealth's competitive position, as a larger network can offer more value to both providers and members compared to smaller networks. Lastly, UNH vast scale allows it to distribute the cost of technology, infrastructure, and administration across a large base of users, resulting in lower per unit costs. This scale also facilitates substantial investments in technology and healthcare data analytics, which smaller competitors might not be able to afford. So at the end of the day, economy of scale enables UNH to offer competitive pricing and innovative solutions that can be difficult for smaller players to match. So all in all, UNH remains well protected against competitive disruptions. This strong foundation not only shields it from immediate market challenges, but also positions it favorably for recovery once adverse conditions, such as negative public sentiments or regulatory changes subside. Okay, so that's the way I see the moat is still intact. Furthermore, I already mentioned earlier, the bad news has got to do with the killing of his CEO. Okay, and this some bipartisan support, but it's going to pull through. There's still a big question mark right there, right? So all in all, looking at the moat is still stable. I think this the business, most important, the business is still stable. It's a good business. Okay, so my conclusion: despite recent stock price drops due to external events and public sentiment, UNH fundamental business strength and its proactive approach in managing healthcare costs and expanding its service offerings suggests a strong potential for recovery and continued growth. Okay, so based on analysis, the average intrinsic value for UNH is approximately 530 per share. With the current market price around 505.86, this suggests a potential undervaluation of about 4.55%. But still, it's still a good, it's still below its intrinsic value that is, um, making me very, very interested in this particular stock. So, but anyway, from a technical perspective, 460 or 405 are possible support areas. So right now it's at 505.86. It's not showing very, very strong buying. If it's able to drop more to 460, 405, that would be even better. Okay. So anyway, as usual, this is not an encouragement for you to buy this, but for you to study, and you can make your own decisions whether this particular stock is suitable for you or not. Okay, so with that, that's the report for today.